Hello there, welcome back again. As promised last time, today we continue to look at some more examples on the basic double entry. How do we record business transactions using the double entry system? As usual, you have me, Goodson Chari. Okay, without wasting time, let's get right into it. Last time we looked at an example like this one, so we are going to look again where you are investing cash as an owner in a business. How do we record this transaction? Let's say the owner invests 50,000 cash into the business to start operation. So what's the effect of these transactions? So the effect of this transaction is that it will increase cash, which is our asset, and on the other hand, it will also increase owner's capital, which is part of equity in the accounting equation. So what will be the double entry for this one? If you remember the rules, an increase in asset account is a debit entry. Therefore, we're going to debit the cash account with 50,000. At the same time, an increase in owner's capital is a credit entry. Therefore, we're going to credit owner's capital account with the same amount. Okay, let's go now to another example where now we purchase an equipment with cash. An equipment is an asset of the business. Therefore, it will be treated as such. So a business buys equipment for 10,000 cash. So the effect of this transaction is that there will be an increase in equipment, which is an asset. And since we are purchasing by cash, there will be a decrease in cash, which is also an asset. So this transaction is affecting both asset accounts. Okay, so an increase in asset is a debit entry. Therefore, we're going to debit the equipment account by 10,000, and a corresponding credit entry goes to the cash account. Okay, we move. Purchase of inventory on credit. So a business purchases 5,000 worth of inventory from a supplier on a credit. So this transaction affects two accounts. The inventory account, which is an asset. So since we're purchasing, there will be an increase in inventory. On the other hand, we're also increasing accounts payable to our supplier, which is a liability account. So as usual, an increase in asset account is a debit entry. Therefore, we're going to debit the inventory account by 5,000, and a corresponding credit entry goes to the accounts payable account, which is a liability account. Okay. And then supposing we're selling goods for cash, we have sold goods on cash. So a business sells goods to a customer for 2,000 US dollars in cash. So if the effect of this transaction is that there will be an increase in cash, which is an asset account. On the other side, there will be also an increase in sales revenue, which is an income account. So according to the rules, an increase in asset account is a debit entry. Therefore, we're going to debit the cash account with 2,000. A corresponding credit entry goes to the revenue, to sales revenue account with the same amount. An increase in sales revenue is a credit entry according to the debit credit rules. Okay. Example number 5, sale of goods on credit. Previously we sold on cash. Now this time we're selling on credit. So supposing a business sells 1,500 worth of goods to a customer on credit. So the effect of this transaction is that there will be an increase in accounts receivable or debts, the amount that the customer owes us as a business, and it's an asset to us. And on the other hand, there will also be an increase in the sales revenue, which is an income account. So the double entry will be the debit to the asset account of accounts receivable a corresponding credit goes to the sales revenue account. Okay, let's move on. Supposing now we are paying a utility bill. So a business pays $300 electricity bill. Now this is an expense account. So this will lead to an increase in the expense account. And since we are paying by cash, it will be a decrease in asset account. So this transaction basically is affecting the expense account and the asset account. So since these have similar treatments, an increase in expense account is a debit entry. Therefore, we're going to debit the utility expense account, and a corresponding credit entry goes to the asset account of cash. Okay, example number 7, receipt of cash from a customer. Now, supposing a customer that orders amount, so is paying $1,500 for the goods they previously bought on credit. What's the effect of this transaction? So the effect of this transaction is that there will be an increase in cash since we have now received the cash, which is our asset. On the other side, there will be a decrease in the accounts receivable. A decrease is in the amount that we expect from the customers now that have paid us. So the double entry will be debit the cash account, and a corresponding entry goes to the accounts receivable account. Okay, and then payment to a supplier. So the business pays $5,000 to the supplier for the inventory purchased on credit previously. So the effect of this transaction is that there will be a decrease in accounts payable, a decrease in the obligation that we have to the supplier since we have paid them. On the other side, there will also be a decrease in our cash since now we have used the cash to pay to the supplier. So a decrease in a liability account is a debit entry. Therefore, we're going to debit the accounts payable account by $5,000, and a corresponding credit entry goes to the asset account of cash. Okay. Now, example number 9. Let's suppose we're taking out a loan from the bank. So the business secures a $20,000 bank loan. So a loan is an obligation, it's a liability. So the effect of this transaction is that we will have an increase in cash, which is an asset account. Now that we have received the money from the bank. And on the other side, there will also be an increase in the loan payable to the bank, which is a liability account. So this transaction is basically affecting an asset account and a liability account. So a debit goes to the cash account, which is an asset, since there will be an increase, and a corresponding credit goes to the loans payable account, a liability account. We are simply following the rules of double entry. Now, supposing an owner withdraws some cash for personal use. So the owner withdraws $500 from the business for personal use. This money is moving out of business. Okay. So the effect of this transaction is that there will be an increase in owner's drawings, which is part of an equity account. And on the other side, there will be a decrease in cash because now the cash is moving out of the business. Okay. So this effect will be reflected as follows using double entry system. We're going to debit the drawings account with that amount, and a corresponding credit entry goes to the asset account of cash. So if you have noted, basically, we were simply looking at a basic example of how we, as accountants, use the double entry system to systematically record our day-to-day transactions. If you are to take your memory back, this is the first step of the accounting process. In the first lesson, we defined the accounting as a process of recording, analyzing, summarizing, and reporting the financial transactions of a business in order to show the overall financial health of a company. So far, what we have looked at is simply recording. We are looking at the systematic recording of transactions. So here, I wasn't giving details. We also sometimes use what we call the T accounts, where you have debit on the left side and credit on the right side as you are entering your data in the double interest system. Okay. So later on, in the next lesson, we are going to look at in the next session, we are going to look at the now basic accounting principles that govern the preparation of financial statements and the recording itself. So this marks the end of our lesson 4. Thank you for listening. If you have comments, don't hesitate to put them in the comment section. Now watch out for the next lesson and don't forget to subscribe. Thank you so much.